Hello and welcome to Big Deal. I'm Nisha Poddar. Now, it's the return of M&A deals in a big way, with cement consolidation intensifying and healthcare transactions increase. And many other sectors are now gearing up for deals as the market euphoria continues and the corporate confidence really returns. Let's talk deals with ace investment banker Manisha Girotra, who heads Moelis in India. And Manisha, welcome to CNBC-TV18. Always a pleasure to welcome you on my show. Now, Moelis advised on the recent Mankind Bharat Serum deal. Let's begin with the M&A transactions, and I'm trying to capture this particular, trend which is now picking up, because in this particular week we have seen two large M&A deals being struck and announced. You have been part of one of them. How is deal-making scenario looking to begin with?
Thank you, Nisha. Thanks for having me. As you said, the deal-making scenario is looking pretty upbeat. We are seeing investors, both private equity and strategics, compete for key assets, especially in segments such as pharma and technology, healthcare services. Earlier in the year, we demerged the Aster business, the Middle East business, and you saw the kind of re-rating the investors did for that hospital chain. So a lot of excitement with the investors. I think till about 5-7 years ago, you saw most of the activity happen only in the tech sector as India dominated and became the office of the world. But I think now investors are wanting to invest in India for India, not just for Indian capabilities for the world, but because the market is so strong, we have this large urban middle class, we have large purchasing power, and hence investors, both domestic and international, are wanting to get their share of that market.
That's right, Manisha, and great that no conversations these days happen without being talked about the private equity participation when it comes to the deal scenario. And we have seen PE players really take a larger share of the M&A pie in the last few years. And of course, their exits have also become on the blocks, and that's what we have seen in the last 2 years, which has put pressure on M&A. But coming back to M&A returning, how do you see the large conglomerates, the big corporate houses with their animal spirits now coming back to the market? Because, the way the cement consolidation is also going on, it's going to be a very hectic and competitive affair between two conglomerates now.
Sure, Nisha. As you rightly said, the animal spirits are back. The last 10 years, the only transactions we saw in the domestic market were the ones which were forced by the bankruptcy law and the ones where the banks led the whole process. It's not the case anymore. The large conglomerates with deleveraged balance sheets and with ample cash on the balance sheets are wanting to consolidate their share in this very rapidly growing economy. So we saw that in the telecom sector in the past. We now have just 3 players, 3 strong, deep-pocketed players. We saw this recently in the entertainment sector with the Reliance Disney $9 billion merger. And now, as you rightly said, we're seeing it in the cement sector. The entry of Adani really has shaken up this sector, and I think the large players are wanting to consolidate their market share. There's a lot of rapid growth expected in this sector, just given what's happening in both the manufacturing sector and the infrastructure sector. The government spent about $2 trillion in the last decade in infrastructure, and cement, as you know, plays a critical role in that segment. So the large players are seeing a huge opportunity now and are rushing to consolidate their share. We saw the consolidation happen in East and West before, and now, as you rightly alluded, we're seeing the same happen in South, where the large players with their large balance sheets, operating efficiencies, economies of scale, are just managing to squeeze out the smaller players.
That's right. And the consolidation in the cement sector, and also you mentioned the kind of euphoria we are going to see because of the infrastructure. And that's why Aditya Birla Group also entered the paint space, where the space is now going to get competitive. But let's talk about another sector, which I think we have seen most amount of deals struck in that particular space is the healthcare space after COVID. You struck one transaction just recently, and there are at least 4 transactions which are waiting to happen. It's a large space. So give us a sense on the healthcare deals in particular.
Sure, Nisha. So if you step back, it's the same thesis in this segment too, that as we have a 400 million urban middle class, they want access to better quality services. They want better healthcare for their family. They want better discretionary consumer spending. And as a result, the pharma companies and the healthcare hospital segment is benefiting enormously from that. Again, governance in this segment is very high. A lot of these companies are set up by first-generation entrepreneurs, and private equity is finding very good talent and professional management, much like they did in the IT sector before, and wanting to make a play in control deals in this sector. So earlier in the year, we sold a company called Healthium to KKR, which was an APAX company. 1 out of 5 medical devices used in any surgery are manufactured by Healthium, a huge testament to India's made in India progress. So, KKR came and won that asset in a very competitive process. Similarly, as you said, recently announced Mankind Bharat Serum transaction. And I think the positive trend here that you're seeing also is that Indian strategics are competing with financial sponsors and the global deep pockets to try and win these assets because of the huge size of the market opportunity. And they are being able to raise the adequate amount of capital to come and fight for these assets. So it's a good time to be in this segment. The healthcare segment started with Max Hospitals. If you remember, Max was owned by KKR. They then monetized their stake in the public markets. And after that, you've seen a sling of opportunities in the healthcare sector, IHH, Aster, the merger. So in both healthcare services as well as pharmaceutical companies, we continue to see expected activity, both from financial sponsors and Indian strategics.
That's right. In fact, lots more healthcare deals in the making. So JB Chem is another one, and also HCG is another one. That particular transaction is going on. What do you think about the hospital transactions, Manisha? We have seen quite a bit of that and the investor interest also in it. But the market, the equity market valuation, as well as in some of the cases, probably the promoters wanting to stick around while the private equity investors looking for a complete control transaction. Are these now becoming the new impediments to the conversion of deals going forward?
So nothing new. I think any M&A, you have to balance a few priorities, whether it's of the promoter or of the private equity. So you need to balance them. The good thing, Nisha, as you rightly said, is that today you don't have to basically look just for a private solution. The public markets are willing to offer the solution. As I said, the Max entire exit by KKR happened in the public markets. The public markets are showing huge depth. Domestic HNI investors and domestic retail investors are lapping up high corporate governance companies owned by private equity in a big way. So there are multiple solutions today. And I think the fact that there is a public market solution is very heartening because it helps us attract more capital from international private equity, because today you can confidently say to a global player that $1 billion to $2 billion solution can be easily found in the public markets in India, either through an IPO or block deals.
That's right. In fact, that is one of the biggest takeaways and biggest positives that have come in for the private equity space in India because of the exit on the equity platform and with the depth that the Indian market is providing. But Manisha, how is private equity action looking? Because last 2 years were a lot of clean out trades. Now they are looking for smaller acquisitions in the sectors uncharted or sectors of the future. But the equity market valuations are making deal conversions more difficult, especially for the investor class, not as much for strategics. How are you seeing this particular scenario play out for the rest of the year?
So I think the public markets will continue to be robust. You're seeing the kind of IPO deal activity. You're seeing the kind of regulation improvement that SEBI is doing to attract more capital through the IPO route. I think that will continue. And I think that's great because what it is doing is what it has done for the last 6 months and will continue to do for the next 12 to 18 is to give great exits to the private equity investors who invested in these companies, public and private. A lot of them going through the IPO route, a lot of them basically monetizing through the blocks. And I think with private equity, if you speak to any of them, the international and domestic ones are really focused on monetizing their stake through the public market route. So that's a positive, as I said, Nisha, before, because all it does, it encourages everyone to look at investing in larger sizes when they come back to invest, because the exits are so much simpler.
That's right. Exit has been the momentum play for the private equity. But Manisha, what is the outlook on private equity investments as you see at the current moment?
So, Nisha, I see a positive momentum. I think India is seeing the bulk of private equity capital that is being deployed globally. A large part of it is coming into India, and not just in the private equity space, but also in other segments such as infrastructure. You're seeing the sovereign wealth funds like Brookfield, CPPIB come in and invest in infrastructure segments. So I think India remains really high on the radar screen, given our GDP rates, given our good governance, given that the government is seen as a strong ally today to private sector. Manufacturing is showing resilience. When I speak to private equity, I think the sectors that are of interest to them, the first one is what you mentioned, which is really healthcare and pharma. It's top of the mind for everyone. Tech, IT services, as well as tech companies continue to attract capital. Financial services, which is really a play on the Indian GDP, is another sector which is attracting capital. Infrastructure, you see some of the sovereign wealth funds coming in, maybe a couple of the other funds such as KKR, etc. But infrastructure generally we are seeing has become more of a play for the domestic large strategics.
That's right, Manisha. And very recently, some of the private equity players have also started talking about manufacturing and industrials also. And these are the real capital-intensive sectors which need the growth capital to be fueled by the investor class. And a lot of them have been deploying more into India from this particular year as well. So, Manisha, hold on to your thoughts. Lots more to discuss on other sectors which are in the play and the outlook on M&A for the coming year. And that's after a very short break on Big Deal. Stay tuned. Welcome back. You're watching Big Deal and we are discussing the key deal trends and also return of mergers and acquisitions by strategics on the deal street with Manisha Girotra of Moelis, India. Now, Manisha, let's talk about the next trends that are emerging. We have seen cement consolidation that is going to continue in South India, as you mentioned. Healthcare deals have been doing the rounds for now a couple of years, and a few of them are live at the current moment. How do you see the other sectors jumping into the M&A bandwagon? Which are the sectors which are now gearing up for a year or two?
So, Nisha, other than the financial sponsors, I see the large strategics which have strong balance sheets basically jumping into and expanding and dominating in the sectors that they exist in. As you rightly mentioned, what happened in the cement sector. You saw what happened in the entertainment sector with Reliance Disney. So I see the large strategics such as the Tatas, Birlas, etc. consolidate their positions in their sectors, as well as you rightly mentioned, enter new sectors. JSW, Birla entered the paint sector. Birlas have announced that they want to enter the jewelry segment. So both organically and inorganically, I think the large conglomerates want to play a very large part in this $5 trillion economy growing at 7%. So we'll see activities in the other sectors too, maybe lesser inorganic, maybe more organic, because the opportunities there are probably smaller. The sectors that, as I said before, that will continue to dominate, because 50% of the capital at play is from financial sponsors are the ones which are light on government regulations such as pharma, healthcare services. Financial services, a huge play, both the consolidation by the banks of the fintech companies and other financial services companies, as well as the private equity players wanting to come in and invest in them. Infrastructure, again, will continue to be a large play. The opportunity is huge and will continue to be huge under the Modi government. So you'll see the likes of Brookfield, etc., this large sovereign wealth funds, as well as the Indian strategic players wanting a greater share of roads, ports, etc.
Right. So infrastructure as well as financial services, those two sectors could see much more traction from here on. But when we look at the startup space, Manisha, that had really ruled the roost on the deal street with the fundraising spree and lots of action. Now IPOs are back after a long time in these startup space, the unicorn space. Now with angel tax going in the budget and on the other hand, a huge anticipation of September rate cut in the US, and probably other central banks also are aligning with that. We are seeing that from Japan, from Bank of England and all. So do you think that the liquidity flush is going to come back? And what is the kind of traction on deals that we are likely to see in the startup space?
So, Nisha, good point. For all the reasons that you mentioned, I think the sector will see some capital coming back. I don't think we will see what we saw 2 years ago when anyone who had an idea could basically go out and raise capital. That's gone. I think people are very clear that if they want to see companies which are demonstrating a path to profitability, if not full profitability, a right to win, size, scale, and only those are the companies that are going to get the backing both in the private and the public markets. You've seen companies like Zomato doing so well, Nykaa, which are demonstrating that they have real operating efficiencies, a path to profitability. Investors are backing those, and that will not change in the next 12 to 18 months. The only IPOs that will do well, in fact, even get a chance to list, are the ones which are able to demonstrate all of these positive trends. The smaller players will either consolidate with the larger players. In the last 12 months, a lot of them managed to raise some level of leverage, etc., or some investments from their existing investors. I think that bit is over now. The ones that are going to basically have good models are either going to consolidate with the larger players or then manage to raise capital through the public markets. But it's not going to be at all as frothy as what we saw 2 years ago. It's going to be very sensible investing in the dominant players, as it should be, as it has been in all the other sectors that you and I have been discussing.
All right, so that correction, consolidation and good sense has prevailed in the startup space, Manisha. But one thing that you mentioned and is one of the biggest takeaways for me, and I would like you to extrapolate on that, is the large conglomerates and the large corporate houses with deep pockets. Do you think that they will play an active role in picking up some of these startups, some of these unicorns, erstwhile unicorns, now having down rounds? And because the flush of liquidity is not going to be or likely to be the same as we had seen in the past, are you presenting such ideas? Are iBankers pitching these ideas? And is there interest on the other side?
So, Nisha, in the past, already the large players have made a play in this sector. Tata's went and acquired Big Basket, 1MG, Reliance acquired NetMed. So the big boys have already made some investments in this sector. I think if there is, and including global ones like Walmart, which went and acquired a fabulous company like Flipkart, I think the global players, both in the financial services sector and in the e-commerce segment, will wait for the right opportunities at the right value. And when they come by, I'm very confident that there will be a play there too.
Right. And what about the promoter class, Manisha? And I want to highlight this because a large part of private equity play has been the buyout opportunity in India, which was earlier not available. Then in the middle, it became a norm. And now the private equity is too keen on buyout opportunities. But in a lot of transactions in the recent past, I've seen that the promoters want to ride the wave of next gen premiumization of the value of the company along with the private equity participation. And we have seen some of the deals go in cold storage when that, buyout opportunity was not there and private equity did not engage. How are you seeing this scenario? And do you think that there will be some consensus between the promoter class as well as private equity to come to a middle ground on this theme that I think will play out given the confidence that is building in Indian economy now?
Yeah, Nisha, I think it's a good point. I think last 5-10 years, you saw a lot of the large mid-cap promoter families wanting to exit for succession reasons or leverage issues or whatever it may be. And their private equity managed to get clean exits. What private equity in the last 5 to 10 years has demonstrated is that they are able to create a lot of value in the companies they acquired. They put in good professional management. They're able to control the destiny of those companies and, more importantly, the outcomes of exits. And that's the model they like in India. As you said, in some cases where promoters are seeing greater value, they have no reason to exit. There's no urgency to exit. You are seeing some sort of disconnect, and in some cases there is a path to exit that is being constructed, i.e. the promoter stays on for the next 3 to 5 years and then gets an exit or gets into a chairman role. And some which, as you rightly said, are falling out because of this situation. And in those cases, there are public market monetizations that some of the promoters are doing. So I suspect this will continue to play out. I suspect financial sponsors will continue to want to do control deals just because of the excellent quality of management that's available in India and the kind of strategic inputs they are now able to provide and feel confident. So yeah, I think this is a bit of a tussle that will remain, but most companies are managing to find some near to mid-term solutions.
All right, so solutions there. So Manisha, apart from this particular point as well as equity market valuations, is that an impediment to deal conversion? And are there any other impediments on M&A at this point as you see?
So I think, look, as you rightly said, the public markets is there, is very attractive, is able to take on large exits. But the way I see it, and the way as most of the people on the street see it, is that It's a way to get more capital into India because you're today able to do these large exits. Delisting norms have become easier, so you can go and talk to strategics who were initially worried about the fact that you couldn't do a minority squeeze out. So short term, you may have some competition, and some of the deals may go into the public markets just because of the private-public arbitrage. But long term, I think it's a big positive. The other big positive, as I said to you before, is just the way the government is partnering with private sector, and that's a key reason you're seeing a lot of the large sovereign wealth funds come into segments which require patient capital. No longer is capital just going into tech and pharma, etc., but people are willing to go and invest in long gestation manufacturing segments just because they see our government as very proactive. So all in all, I think globally, if you speak to companies, they see us as both strategics and private equity. They see us as a country which is dynamic, growing well, wanting to attract capital, both on there is public and private partnership, there is good single window clearances available. So I think we're in the sweet spot as far as global foreign capital is concerned and our ability to attract it today.
So ease of deal making has substantially improved with equity market exits available, in particular, apart from the other economic factors which are really lifting the sentiment and propelling more deal activity. But Manisha, very quick question, the last one, can't let you go without that. Of course, women participation in the transaction space, you have been an outlier in your time and still continue to be. And private equity space in the last few years have been very focused on improving the participation of women in their firms as well. How do you see it on the M&A front?
I'd like to see a lot more. I think in all the transactions that I've been seeing, it's very heartening to see the law firms. I think they're doing a lot in terms of attracting talent, and you see a lot of women in the law firms negotiating these transactions. I'd like to see a lot more in the banks too. Private equity, as you rightly said, Nisha, is really trying to retain women talent, nurture it and grow it. And so are the banks. But I think for all the reasons you and I have discussed in the past, we want to see a lot more talent come through the funnel, and we're struggling with that.
All right, but that effort continues from your end as well as mine. Manisha, thank you so much for joining us with your insights on the M&A street. It's always a pleasure to speak to you right here on CNBC-TV18.
Nisha, it's a pleasure to speak to you.
Thank you so much. And with that, it's a wrap on this edition of Big Deal. Thanks so much for tuning in.